Welcome back to another episode of CPF at 55. Today we have three of us here, including a guest with us. And for today's episode, we will be looking at some of the options that our guest today has for Swee Yong as he embarks on his CPF at 55 journey.
Okay. Thank you very much for joining us, David. Today we have invited another estate planner and financial advisor to help offer me more options about what I can do with my CPF money, because as you know from episode 1, I already said that I will keep to the full retirement sum, and I would like to withdraw anything in excess of the full retirement sum. So I've asked David Lee to explain what are the options that I really have. So just to recap a little bit, based on feedback as well from some of the other videos, some people would tell me that if I were to withdraw the money and then leave it in insurance or some financial investment firms managed products, that it could get expensive because of some of the fees involved, transaction fees as well as the commission fees, and that if it were investment linked type of insurance product, that it would also lock up my money and couldn't be withdrawn. So isn't it similar to putting it into CPF Life, meaning overextend my FRS into ERS? Now, I'm also of the mind that I can self-manage, that I'll be disciplined enough to put my money into private equity, especially in real estate. I might save on some transaction fees if, let's say, I manage to invest in some of the listed bonds, listed ETFs, and of course, equities. But then, what I really want to do is to hear about what are the other options that will help me protect the money. Also, not all my money is going to be withdrawn into investments. So, again, just to recap, the scenario that I provided to David for today's discussion is that I'm going to withdraw about $200,000. I'm not going to try to beat the estimated 4% that CPF retirement account and CPF Life might be paying me in the next 20 to 30 years. The priority that I have heading into my semi-retirement and eventually into full retirement is that I want to protect the capital. I'm happy with steady returns, even if the returns are lower, because I understand that I've got to pay a little bit. There's a little bit of cost of having flexibility where I want to cash out for in case of emergencies or in case my health turns no good and there is a need for a lump sum of money. Otherwise, economic downturns might still happen, of course, within the next 30 years of my life. Increasing bills and urgent family needs, we can't forecast that.
Yep.
So taking into consideration my children, my wife and parents' current situation, I think that I would like to withdraw 200,000 from CPF. So over to you, David. Advise me, what are the things that you have seen out there that could be helpful to my situation?
All right.
Thank you,
Hi,
David.
everyone. Yeah, I'm happy to be here. In the past, by the way, I'm David. In the past, I was a fan or avid reader, and I've come across Swee Yong's book, and it's a pleasure to finally meet you in person. Okay, you have given a very real case, all the thoughts that every person, every CPF holders at turning 55 would definitely think about. So I think your viewers are very fortunate to come across this video because you have helped them think so much. Yeah. So I think the main thing is that again, there's so many options out there. And first of all, I would like to highlight to people, do they understand and do they know the different options out there in the market? Like for you, Swee Yong, you are well read and you have a network of friends. But first of all, I think most people, they are a bit concerned of the options out there, and they also do not have the right guidance to what to do. So today I hope to address that. To come to your question that you gave to us, right? Like your assignment for me. Uh, I would like to share that this is something that I would advise Riyong based on his needs, and definitely you should talk to your trusted advisor before making any decisions. So the scenario that you provide to me is you would like to withdraw about 200,000. You're not going to beat CPF RA and CPF life returns. Your priority is for capital protection. You're happy with steady and low returns of 2% per annum, have the flexibility to cash out for emergencies or different scenarios, unexpected ones, and also taking into consideration your families. Yeah. So in this case, I think out there, if you are not, first of all, I would like to share the differences between CPF RA and CPF life returns. So as many people are aware that CPF OA pays about 2.5% per annum, CPF SA and RA in the 4 point something range. However, CPF Life is a different product altogether, I would say. Yeah, it's actually a government built annuity plan to help retirees to have sufficiency for the long run. And it tends to favor people who have a longer life. Why do I say so? It's because many times annuities, be it in Singapore or globally, all the interest rates are usually pulled together. And you can refer this to the CPF website, which I believe Justin can flash, where it mentioned that all the interests are put together so that they are able to fund people who overlive the average expectancy in Singapore. And CPF Life payouts are being withdrawn from your capital all the way until you run out of it, and then the interest from the pooled returns would benefit you. So in your case, where if you want to have capital protection, coming out to invest outside of CPF would be definitely some risk. For example, it is irreversible, meaning that whatever monies that you take out, you cannot put back in. And if you want capital protection, definitely unit trusts, even bonds nowadays could be a bit risky. In the past, bonds, were quite stable, but we know that back from 0% interest rates back in COVID period 2020, fixed Ds was about 0 point something to 1%, and then it went up to about 3 to 4%. What that means is that people who invested back then actually lost their capital even investing in bonds. Therefore, capital protection, in fact, the safest one, like it or not, it is actually through private annuity or retirement plans or certain insurance savings products, where you can refer to by an article on Straits Times, shared by the Provident CEO, Christopher Tan. Yeah, so these are other options that you can have where they give you pretty steady returns, definitely. Yeah, usually it ranges, I would say, above 2% for now. You would see a good return that can beat inflation. And at the same time, you have flexibility to cash out for emergencies. You can take it out any point of time after the certain surrender value period where they guarantee your capital. In cases now out there in the market, you have those that guarantee your capital from the year 3 onwards. Some are later. So it's definitely very important to read the fine prints. Yeah. So in your case, just like I mentioned, what if suddenly healthcare turn? You can just, if you put in this 200,000, you can just withdraw, let's say 50,000 to provide for that need. And if, given that the capital is guaranteed from the 3rd year, for example, which means that there's no, you can just take out everything without losing capital. In that case, some of your viewers' concerns that what if is a kind of a long lock-in, it is also not very true. Yeah, because if you can take out your capital, meaning from 3rd year means it's definitely more flexible. And yeah, I hope so far it's quite a bit of stuff. Any questions you have, and then maybe we can take it from there.
Yes, so it seems that there is a little bit of trade-off. If I left more in CPF RA and CPF Life, of course, financial creditors can't come after me, and in case of a business downturn, if I ever had to declare bankruptcy, then that money is still safe, right? But then, of course, there's also protection against Tai Yu Long. But then, in this case, I'm looking for flexibility because with the state of health now that we see, you could be quite seriously sick and needing the cash, but then you are not sick enough that CPF would be willing to release your long-term savings, right?
Yeah.
Until death. So that's the balance that I'm trying to look for. Therefore, there is a bit of a cost to the flexibility. However, it doesn't always mean that it is a cost, right? Because some of the investments out there, depending on how the macroeconomic situation is, might even return me more than 4%, isn't it?
Yeah, definitely. I think there's a lot of options, but definitely if you are open to the risk.
And in fact, you also mentioned that maybe before I make my decision to withdraw, while I'm still looking around for the various options and products, that I could actually leave my money sitting in OA first and to earn the 2.5%. And then over the next 2 years, as more and more fund managers and insurers launch new products for 55 and above people, that then I could deploy that money from OA outwards.
Yeah, what you say is true. I think, first of all, you brought up a point where you can just keep it in CPF. And one thing I would like to highlight is, do you know that your CPF can also be invested through the CPF investment scheme? Where you open a bank
Okay.
account with one of the three local banks, and you can invest in money market funds, which are funds that buy into short-term bonds. Currently, the yield is around 4% per annum. Of course, definitely it is not guaranteed, but if you are looking at a short-term plan, like you mentioned, 2 years, you can park into something like that for the time being where it is still flexible. When you use the CPF monies to invest through CPF IS, you can sell the funds one day and put it back to your CPF, as opposed to when you withdraw it in cash, it is irreversible. Yeah, so there's one
Okay.
option you can take. Yeah, for sure.
Okay. So using my OA money, which is through CPF IS, I can buy like bond funds or dividend funds that are more steady yielding instruments to take care of my more regular needs for cash flow lah.
Yeah,
Okay.
however, you can't withdraw the dividends. It would all be plowed back into your CPF OA, but you can then initiate
Withdraw
the
from the
withdrawal.
OA bit
Yeah,
by bit. Okay.
bit by bit also
Mm.
can. Yeah.
And you were also discussing some framework card
Mhm.
model that you were telling me about. Please elaborate.
Yes. So I think it's very important to have I believe it's very important to have a framework to make your decisions on whether what to do with your retirement, and that includes your CPF. Yeah, when you have clarity where your monies will come from, therefore you make a better decision. So for me, in helping my clients, I use the card model. Basically, it means C is for CPF Life, A is for annuities or retirement plans, your private annuities. R is rental income from properties. D is dividend income from investments or coupon from bonds or your business as well. So basically, having this, you are very clear that, hey, where are my income sources are coming from passively, and therefore you can make a more calculated decision. For example, some of my clients, I believe most people in Singapore would not have or afford a second property for rental. In that case, the R is out. So therefore, they need to push a bit more the other two engines, to have more either annuity income or dividend income. And from there, you can calculate the sufficiency for retirement and make a better decision as to whether to withdraw your CPF or just keep it there for the time being and invest in different type of products that's available.
Yeah. Okay.
Yeah.
Your approach is quite a lot more holistic rather than just being so focused on CPF or equities or the insurance part. Okay.
Yeah. I think
Okay.
it's important to see in this way, then it helps to guide your decision rather than just looking at a certain amount. Because end of the day, if you see that, okay, if you are okay with, let's say, 3% per annum returns, for example, but at the same time, you realize that, hey, actually, at some point, I might need to withdraw from my capital, right? Because when you say you want 3 or 2% per annum return, let's say you're just assuming you're just using the dividends all the way. But many times people, when they are approaching retirement, one thing that a lot of people do not realize is that you have been building wealth since your 20s. Like you said, Sui Yong, you were working for 30 years already. And your tendency is to, hey, I just want my wealth to grow. I just want to grow my wealth and all that. But when you reach a certain point in time where you're retired or going to retirement, the mindset of managing money will definitely be very different. Like what you shared, right? You need to take care of emergencies, you need certain flexibilities and all that. And you need to also come into terms with this thing where you need to withdraw a certain part of your capital, yeah, to slowly draw it out. Where some people call it the retirement drawdown calculation, yeah, where you get to, yeah, you slowly draw out. And therefore, we need to have very clear strategies, or even like for myself, I help my clients through a very good fintech system to give them a picture illustration on how and when they will start diminishing all their capital. Yeah. And from there also, how much would they be leaving to their family members as well?
Yes.
Because yeah, I think that's very important for a lot of people.
Yeah.
Yeah.
We all have to be prepared to start using up the capital because the capital is our savings. What is generated from the capital is the bonus, the income portion. So I'm prepared, but I'm just concerned that healthcare or emergency costs might actually wipe out a lot of money, and then CPF, this large pot that is stuck in CPF cannot be used to help.
So if you are above 55 or due to closure of the CPF SA and you have additional CPF OA, I have a checklist and also 5 action steps that you can take to optimize your CPF and supercharge it towards your retirement. And because I believe that CPF investment goes beyond financial knowledge, but also understanding your psychology and behavior investing. And with this video, I've also included a free gift for you, which is a checklist of 18 questions comprising of quantitative and qualitative factors to make a wise decision on what to do with your CPF monies. And before you withdraw your CPF monies, please think twice because it is irreversible. And you are swarmed with so much information out there in the market. And your decision in any schemes, be it BRS, FRS, ERS, or even basic or standard or escalating payout, will either bring you joy or stress in your retirement years. So yeah, please check out the link below to email me, and I will send you this checklist, courtesy of Sui Yong, only for your clients and your viewers.
Yeah, the audience can look at the text box below this YouTube to get hold of David's contact as well as the checklist that he's talking about.